One thing I've noticed, I'm an older person, 38 years young, and one thing I've noticed about the Gen Z and the Zillennials is that the term yelling changed meaning from when I was getting yelled at to now. Like now, if someone says, and he yelled, it just means anything. Like he just spoke, with any kind of anything. It just means anything right now, yelled. So I don't know when people say that I'm yelling, am I actually yelling or am I just saying anything? Because I really feel like yelling has been, Squeebo, what you got?
Well, I belong to the same generation as you. And yeah, I think, what we're moving toward is a point where anytime someone is, let's say, direct, right? If you don't pose something as an open conversation, then you're yelling.
Yeah, it's insane.
It could be take out the trash. Oh my God, don't yell at me.
Why are you yelling at me? Yeah. No, exactly. Exactly. And it's not like direct is like always good. So there should be a word for like, listen, like, can you leave it a little more open-ended? But like yell, it's always jumping to the characterization of the yell. So anyway, do not tell me I'm yelling, anyone out there, unless I'm actually really yelling. And you'll know when I'm yelling. You know when people say stuff like that? Like like you'll know when I'm yelling. It's like, I don't know, maybe you won't. So okay,
But it's funny in the chat.
Okay, so we're going to start now. All of this to this point will be cut out of the podcast, but basically I'm going to start, open it up, kind of talk a little bit about the pod and what the episode is and give a little intro on the topic. And then we're going to have a conversation with H is the centerpiece of this because he's the expert on this and just an overall interesting guy. So we're going to talk about that. And then the crucial part is all of you can ask questions of H or about the topic or just say whatever, and then you'll be on the podcast. And that could be huge for your personal brand. A while ago, we did an episode about advancing your career and how to build a career through NFT podcasting. And one universal piece of advice was that it's good to, practice public speaking, get your brand out there and talk. And this podcast is a chance for that. You can be on Spotify. So I encourage everyone to do that and also to take advantage of H. But now I get to talk, and we are going to get into it now. Hi, everyone. I'm Middlemarch, Tom Lehman, and welcome to this week's Capsule 21 podcast. The title of this podcast is Art or Startup, featuring H. Wonder. And he is our first ever guest on the Capsule 21 pod. I'm very excited to have him here, and he's going to get into this very important question of Howie to SEC EAD in NFTs without really trying. This is a podcast about securities law. So get ready. If you are used to our usual lighter fare, this is a pod where you are going to have to learn. You're going to have to learn to keep track of this, and it could save you a lot of money and give you the chance to save other people a lot of money, or at least slam dunk in their face if they say something stupid. So this is going to be one where you have to pay attention, and it's going to deliver a lot of value, and we have a great guest here. The Capsule 21 podcast is a podcast put out by Capsule 21. Capsule 21 is an art collective devoted to the promotion, generation, celebration of timeless art through NFTs and blockchain technology, and specifically on-chain art, using the blockchain itself as a conduit for art. The three Capsule 21 current members are myself, Middlemarch, at Dumb Name Numbers on Twitter. My real name is Tom Lehman. We got Piv in the house at PIV_PIV, and Dovetail, who is not here today, at D, the number 0, VETAI, capital I. So tough one there for Dovetail. We're working on that. But that's Capsule 21. But forget about us today. The big person here is H. Wonder. And so let me give you a sort of, we're going to go into this. So here's my, thoughts on this situation. So it is art or startup. So the question is it art or is it a startup? So let me paint you a picture. You are in your house or maybe a restaurant, and someone comes up to you, maybe it's a friend even, and says, listen, I've got a great proposal for you. I have a piece of paper here that's called stock, and you can buy it. And if you buy it, what you'll be happy to know is that I have got a lot of plans for making it worth a lot more than you paid for it. And here are all of my plans. And in fact, I'm calling it a roadmap. And so if you buy this stock now and wait a year, 2 years, 4 years, you'll be able to sell it for a lot more than you paid for it. And in fact, I will take some or even all of the proceeds of the sale to you and put it towards executing this roadmap and making it worth a lot of money. And here's my background and everything. And this is called a startup, right? Like startups sell stock to investors and try to, fiduciary responsibility right there. This is their whole point, to make the stock go up. So that's one, that's startups. Now, art up. Someone comes to you and says, I'm launching an amazing NFT project. And this NFT project is going to have a limited supply, just like in the stock case, you can't issue new stock forever. You have to have some kind of limited supply of stock for now. Maybe you issue more in the future. But the startup case has a limited supply of stock they're selling. And the startup case says, hey, not everyone can get into this round. So it's limited. And the NFT case says, hey, we're doing 10,000 of these things. It's limited. There's a fixed number. And here's what I'm going to do when you buy this. I'm going to execute on this roadmap. And I'm going to create all kinds of utility around this. I'm going to create all kinds of other things you get with this. I'm going to create a company around this maybe, or at least an organization around this. I'm not just going to take your mint money and run. I'm not going to rug you. I'm going to put this towards a forward-moving energy thing that is going to make this NFT more valuable in the future. And you're going to be able to sell it for more than you paid for it. And so that is an NFT. And so you might ask yourself, okay, what is the difference between an NFT and stock? And this is an important question because there are a lot of rules about how you can buy and sell stock. And one of the biggest rules is you can't just go around selling stock to anyone, right? You can only sell stock to accredited investors unless your company's public or whatever. So it's like you have to be nervous about this. Now, you might ask yourself this question. If you go to a place like Charles Schwab Brokerage, then you can buy and sell stock. This is a sort of what you might call a marketplace for stock. Now, there are a lot of things about Charles Schwab, which is this one I happen to use sometimes, that's interesting. For one thing, I don't have a profile page or an image avatar. When I go there, it's like fairly and there's a lot of text, a lot of legal stuff going on. Then you go to OpenSea, and so you have to ask yourself if it's can OpenSea sell stock? And maybe that's kind of tricky. So this is the kind of question we're getting at when it comes to the sale of stock via a person selling it to you by the interaction between, for example, an NFT project founder and an NFT quote unquote investor or collector. That's one relationship. Another relationship is a marketplace for this kind of stuff, and that marketplace's relationship with the people on it. How do we know if we are doing an art thing or a new type of NFT thing versus just wrapping up the old thing in a bunch of paper that gets around the restrictions on what you can do with the old thing? And then, what does it all mean? And should we be terrified about this situation? So, that's kind of how I'm thinking about this. But really, I want to let H talk. But before that, I want to just introduce H. H is a great friend of mine, a great collaborator of mine. I've never actually met him in person. I have worked with him on several projects starting in earlier this year, but I don't know, that much about you, H. So maybe for people, because people like the human element, maybe you can talk a little bit about, where you're coming from, who you are, and then we can get into the boring SEC stuff.
Sure, let's do it. Awesome. Can you hear me? I changed my headsets.
Perfectly.
This is great.
Perfectly.
Awesome. So, my background is in startup technology. I've built startups, I've sold startups, I've built startups, and they've crashed to zero before. In all of this experience, there's a lot that you learn firsthand. You learn a lot about legal structures. You learn a lot about deal flow. You learn a lot about how what is seen as call it a great deal, how that can turn out to be something that's not so great in the end when all the capital is distributed. And in all of this, you deal with a lot of lawyers, and you deal with a lot of boards, and you deal with a lot of structuring of deals. And through all of this, you learn a tremendous amount. I've worked at Google, I've worked with Adidas, I've worked with Verizon, I've worked with KeyBank and Bank of America. Built a lot of amazing products. I got into the call it crypto space in 2017. At the top of 2017, the old thing, as you referenced, was happening. The old thing looked like the Book of the Month Club. Somebody had a new book or a new release, a token release, where they would put up a website, and on the website there would be a bar that said we're selling 1 million tokens of this, call it token, and you were able to use this newer cryptocurrency called Ethereum, Ether, and you could pledge your Ether to get this new token. You would do it because you believed, after reading this white paper and seeing this like structure of this beautiful bio and this face pile of names of people who were part of the team, who had different disciplines, whether it was technology or legal or whatever the case was, you would kind of make a speculative guess that this was going to be the bottom, and the price of this new token was going to go to the moon. This was going to be the next new thing. How could we do an ICO for X? We can do an ICO for shoes. We can do an ICO for messaging. We can do an ICO for AI, whatever the case is. And each month, at the top of 2017, these companies would launch this process, and they would raise tremendous amounts of money, millions of dollars, in days, in minutes, in hours. I mean, it got down to Filecoin, which was perhaps one of the biggest, that was VC backed. And the success of that kind of brought the attention of the SEC into this discussion. So can you raise money in this way? Can you put up a page like this? Can you kind of form a business, call it? Can you sell these tokens, call it? Can you raise this capital and then give the holders of these tokens some type of, call it, value that's associated, or utility or usage that's associated to this process? And the end result of that was, first, at the end of 2017, the SEC made a statement. And in the statement, they called out all of these different operations, and then backed it with kind of a framework for digital assets. These, call it, tokens, to include the ICO tokens or NFT, digital asset tokens. And in this framework, the kind of basis was, if a lot of people get it mixed with the Howie test, but the actual framework from the SEC looks like, does this require employees and or management to share in the kind of success of this, call it, business, with this token's backing? Are profits and losses shared with this token? Is there revenue being moved around and shared from the sale of this token? And then if in particular there's some sort of joint ownership, whether it be licenses or intellectual property or anything of the sort. So let's park these two things. Let's park kind of the ICO framework, and then let's park the kind of the ICO history, and kind of fast forward a little bit. So,
well, sorry, real quick. This is really fascinating.
Sorry,
before we park it, just because I definitely wasn't around for this, but I vaguely know about Filecoin, just like the basics of the Filecoin thing, right? Absolute basics. So Filecoin wants to be a storage, decentralized storage platform, something. The Filecoin token, I think, correct me if I'm wrong, was going to be something that people use to buy storage space or something like that. And the Filecoin ICO was a sort of way of, getting people to, exchange Ether or whatever it is for these coins. And the idea is that if a lot of people start using the, protocol or whatever, then the holders of these coins are going to get, call it, revenue from this. And that's why the SEC doesn't like it, because you're buying a share of future. Is that kind of basically the idea of the Filecoin thing?
Exactly. Which led to a lot of kind of the follow-on from Filecoin. So Filecoin was unique because A16Z got involved with Filecoin. So A16Z made a big announcement. It was on TechCrunch and all of the tech blogs, the very popular tech blogs. And this kind of fanfare drew a level of credibility to the ICO model, which was a big driver for the SEC making statements. In the model, they forced it to, or prevented non-accredited investors from participating. So you had to register in this kind of pre-mint or pre-launch KYC, know your customer process, which is a process that is designed to prevent it's part of the Bank Secrecy Act. It's part of preventing anti-money laundering. And in this know your customer on-ramp, you have to prove that you're an accredited investor. And it's that point that when you're qualified, you can participate in the ICO. The ICO raised, I think 200 and some odd million in, I believe, it could be a little less time, but I believe it was about 15 minutes. It was a fascinating thing to experience real time. Because of the structure the framework that they used, the token wasn't eligible to be circulated because the SEC has certain frameworks with registered securities. So you have register frameworks for Reg D, which is like your traditional framework for that startups tend to use, that allows accredited investors to participate in the funding of a startup for some type of equity percentage of ownership. Then you have the Reg A, which is designed for crowdfunding, but it's a very rigorous process. With Reg A, you could raise capital from a registered community that they have to go through a process of proving how much income and the ratios of their income that's taxed in their adjusted growth against like a percentage that they can participate with. Again, it's much more rigorous. So later they created what's called the Reg CF, which is designed exclusively for crowdfunding. The Reg CF framework allows pretty much anybody that's a U.S. citizen to participate in the funding event of a security. Now, in all of these cases, there is a time lock, call it, that prevents these tokens from instantly falling to an exchange and moving into a secondary market. They are non-transferable for a said period of time.
Sorry, real quick, just interrupt here. Like all the stuff you're saying is basically, in the end, the SEC looked at this and said, okay, we're not going to ban all this stuff, but we're just going to look at this as, what it is, or what we think it is, which is a cooler and maybe more technologically sophisticated and faster, and 15 minutes. It's a cooler way of doing, a fundraise of some kind, basically. And just like with a fundraise, you go to, they always call it Sand Hill Road. You see all the VCs, right? And you pitch the thing, and all the VCs are accredited investors, and you pitch them. You can only do 3 meetings a day because you have to drive around. This is a cooler way because you can get hundreds of millions of dollars in 15 minutes without having to sign or do all this stuff. But fundamentally, it is the same thing as raising money, and that doesn't mean it's bad, but it means you have to play by these rules. And one rule is the accredited thing. The other rule is you can't just have a secondary market going crazy on this is another thing. So that was kind of the equilibrium here, was like, cool way to raise money, but not the original dream of anyone can sell any token at any time and just go crazy, basically.
Exactly. So as a kind of follow on to all that activity, the SEC started to file civil lawsuits against all of the big ICOs. Kik in 2018 had a $100 million suit with the SEC. Recoin, $4 million, 2017. Revits, which was a blockchain wallet, they were issued their paperwork in 2021 from a 2017 launch. Even in this past August, Dragon Coin for 16 million. So they're still kind of building cases and going after these projects and finding these projects. It doesn't mean that the project can't continue. It just means that the project's going to have to pay a subsequent penalty for the securities violations.
So basically, you have this situation where 2017 comes up, people have all these like legitimately cool ideas that are also wrapped up with greed, basically. And the combination of these two things leads to legitimately interesting outcomes, but also, violations of laws and victims who got messed up with this thing. And so, then we have this thing where the SEC regulatory framework, maybe the system work kind of reins this in and says, hey, we got to penalize and ban the greed, but we're going to let the other good stuff, stick around. And now there's V2 of it comes out maybe, and V1 is still getting litigated, as you mentioned, but like V2 comes out and people start to feel better about this. And we have this process going. And so now what we're seeing, if I understand you correctly, is, the ICO, the system's working in the sense that now, forward-looking ICOs are going to be both, more, better understood, less crazy, more compliant, regulatorily speaking, and also probably, serve people better because the total chaos, maybe the accredited investor rules are, very stringent or whatever, but total chaos and mayhem is not good for normal people to get wrapped up in. And so then you maybe can draw the through line. You can ask yourself, does history repeat? And the answer is yes, it perfectly repeats. And so then you can ask yourself, what phase in the NFT game are we? Or at least that's kind of where my mind goes with this conversation. Is that right?
Absolutely. So you fast forward to kind of the rebirth of NFTs. NFTs have been around for some time. They were call it popularized the first time with the CryptoPunks and CryptoKitties and significant investment from A16Z into the CryptoKitties, the launch of OpenSea, all in the bottom of 2018. Fast forward, Top Shots kind of emerges, and there's this exodus from the AMC and GameStop communities that have kind of formed over into Top Shots, which produced a lot of value for a lot of people. Then you get to the top of 2021, where you're hearing these stories of, call it tokenized art, tokenized content, tokenizing images, videos, memes, music, whatever you can think of. And the popularity of those stories drew a tremendous amount of attention to the space. So you see, Beeple, you see Grimes, you see Rihanna, you see these massive polarizing figures make enormous amounts of money by selling their tokenized content. Looking at the, call it original CryptoPunks model, kind of unearthing that history, looking at the Top Shots model, we begin to see the reinvention of kind of this tokenized art mixed with the, call it fundraising framework of an ICO, where you create a supply, you create a pre and public sale price, you have some type of activity to pre-qualify these people. You put that same site up with some type of communication of what you're going to do, maybe not as sophisticated as a white paper or even a light paper. You face power your team, and you create the same type of speculative, call it primordial goop that these types of things are birthed from. People put in their Ethereum and they pay whatever that rate is. They get this asset to subsequently trade with other people in a open marketplace. So what began to look like art turned into what favored a lot of the same kind of conditions as a ICO.
Right. So it's sort of this is very interesting, right? Because it's like the repetition, you can see the advances here too in how either people are thinking about how to do this or how it just emerges because these are the ways to do it. But like, imagine this, the person's pitching you on stock, right? And a stock, and its stock comes on a stock certificate. This is actually kind of real and a weird thing. Like stock is on stock certificates, and those are somehow important in my experience with stock. So someone's pitching you saying, invest in my startup. Here is a stock certificate. And I say, well, I'm not an accredited investor, so I can't actually buy that right now. And so the person says, okay, fine. Here, I'm going to put a very pretty picture on the back of this stock certificate. Now you're not buying the stock certificate. You're buying a very beautiful picture. You're just doing an art transaction here. And in fact, there are different rarities of stock in real life, right? There's like common stock, which is the normal one. And then there's preferred stock, which has some additional privileges on top of common stock. And they get paid first, or it can be different tiers of this all the way up to infinity. And so you can imagine even the gold one is the preferred one, or whatever. So, you can't literally put the art on the piece of paper, but just, you can imagine metaphorically, that's kind of allegedly maybe what happened, right? People had the idea of saying, if we can just get people to focus on the veneer of this thing, i.e. what it looks like when you hold it, maybe people will forget about, what it really is, which is maybe something more akin to stock than than an art project, basically. So, it's with an ICO, it's maybe a lot harder to do that, right? Because you're buying, a coin that just, what does it have? It probably does have an image on it somewhere, like on CoinMarketCap, it has some picture. That's like one picture for the whole thing. It really is stock. You can really, it's just shares of stock. But then with the NFTs, they're quote unquote non-fungible. They have a cool picture. They have a narrative, a lore to them. Can we, pretend that? So I guess my question is like, what are we right now, in your view, H, like in a world where or what are the differences, I guess, really? Like, are we reinventing ICOs with a better, way to avoid looking like a security? Because if we're doing that, right, then we're in for an issue coming up, maybe even very soon. Kim Kardashian, something happened with the violation. Like, I don't know if it's really the same thing. What are the differences, this time around? Are there, how do you, are all, and certainly not all NFTs are, the same level of risk here? Like what's the nuance that's been added this time around?
So there's a lot of nuance, and the irony of Kim Kardashian even is that, I'm a big fan of history rhymes. This is the same kind of fallout that we've seen with DJ Khaled and Floyd Mayweather a few years ago, that they were doing the same thing. They were settling with the SEC for the same reasons. They're promoting these token launches, is what they call them, these token launches that are fundraising events. So the SEC is fully aware of everything that's happening right now. When it comes to the NFTs specifically, the NFTs are that they sit in the same framework that the SEC put forth, which is kind of defining what an investment contract is. So that's the kind of boilerplate. What is this an investment contract? Not a smart contract. Is it an investment contract by their definitions? And those definitions look like a case where a person's participating with the full expectation that this business is going to provide and produce value. That's the most fundamental piece, is the intention of the issuer of this NFT. Am I a business that's launching, call it these tokens, to raise money, to use this money to market and promote what I'm doing so that it grows and it's worth more? That is the kind of the human speak way. And I can circulate the actual excerpts from the both Howie and both the framework that the SEC put out for these digital assets. But the basis is not if there's a formal share issuance like with traditional stocks, but intention. Is this company selling tokens as shares in a enterprise that they're using the funds to make the value of the enterprise go up? That's perhaps the most, again, human approach to kind of encapsulate what they're looking for.
So the sort of the meme is sometimes like, hey, like, is this project a rug, right? Like if an NFT founder, creator of an NFT project, puts out the NFT and then disappears with all the money forever, then that's not so good. It's sometimes thought of like that's kind of the rug. Whereas by contrast, the founder who does a bunch of things after launching and stays with the thing and wink wink tries to make the number go up, like that's seen as like good, right? And that makes sense in the context of the investment framework you just laid out. Like if you put money into a startup and the CEO disappears, then whoops, but if it's not that, but so the idea basically being like, if an NFT is really talking about a roadmap and using a portion of the proceeds from the mint, i.e., turning into a fundraise to execute that roadmap, then that is maybe even more so a rug than the typical you thought about rug, because they are, doing something that is just not possible, which is selling you stock in a not above board way. So, maybe the traditional rug is actually the less rug than the roadmap enabled fundraising rug.
So the key word that's used in all of the documentation is common enterprise. And again, back to earlier, that common enterprise looks like, the structure of a business. Businesses have some vision, some kind of charter that they're carrying out, call it a roadmap, call it bullet points of what we're going to do to create value for you, call it giving you intellectual property so that you can, or we can, or I'm sub-licensing it to you so we can to create value for our community from this intellectual property that we're distributing. If we, the producers of this project, are working under this kind of umbrella towards the same goal, regardless if we're even in the same space, towards the same goal, we are operating as a common enterprise. So I think that it's really, it's more obvious than what people realize that it begins with business. That nuance is no different than the case of, as we were talking about earlier, like a case with murder. If a stranger comes to your front door and kicks in your front door, and you're wrestling, and there happens to be an axe, and it cuts into that person and they die, then it's a different charge than if you are angry at somebody. You go out to your vehicle, you open the trunk, you grab that axe, walk to your neighbor's house, and then to hit your neighbor with the axe. The intention is what's most critical, that kind of determines the intent and the action, of course, that the government takes. So in the case of, we're a business, we're doing this kind of mint-like structure, we have X amount of supply, here's our mint site, here's our, call it, roadmap of things that we're planning to do and benefits that you're going to receive as a result of what we're going to do, here's our team that's going to execute it. Let's begin. Go ahead and mint it for X price. This is where things become an issue compared to the, let's call it, the Goblin case, where this is just art. We don't really care. It says we don't care in our, there is no roadmap. In fact, it's free. We're not even charging you for this. This is an artistic experience solely. That model allows for the digital asset to be seen as a digital asset collection of art. That's the nuance.
I love that. So the Goblins, once again, not only did they pull a really good move in terms of creating a phenomenon and making money from it, they also, though they are thought of maybe as being like annoying or something, they also did it in the least ruggy and most above board way, approximately speaking. So I have a ton of other things, but Sweebo, hand up. I promised everyone an appearance on a major podcast today. So Sweebo, what's good?
Hey, man. So I wanted to try and link this to an alternate interpretation and just kind of, see where that goes. So if we look at Tesla, right? Tesla said, we want to make an electric car. And I don't remember if it was part of the original quote unquote roadmap to say we also want to have a self-driving electric car, right? But their initial offering was the Roadster, right? And the analogy that this brings me to is that people could say, oh, this is a brand new company building a brand new car. Maybe I just want to have the first edition, right? And if that self-driving thing was a part of the plan for Tesla, right? Buying this car does not inherently mean I expect buying this car to make me rich. They're saying, buying this car, I expect to get a self-driving vehicle. There's a fine line there. And so, yeah, with the goblins, it's obvious, right? One goblin equals one goblin. And then within the Howie test, it actually says financial gain, right? What one of the nuances that a lot of people come to is Ether is currently considered an asset, which is more like, again, owning a car instead of having a stock or a bond, that type of thing. And so, yeah, what do you think? How would you compare?
So so in the case of Tesla, the issuance of stock is a little different than the actual vehicle. Um, in the case of Tesla, they're, as a company, are going to, as a business, are going to make sure that their process for issuing things like this are within their legal framework. They're going to say, do we just need to file Reg D because we're only going to give this to super rich people? Or do we want to open this up to the world? Okay, let's do a Reg CF. We can raise up to 5 million using this mechanism. It's different than selling an actual product. Just because the SEC views what a digital asset is a lot differently than how it views what a motor vehicle is. So I think just kind of mixing the two ideas, I think there's a nuance with a business. A business has a certain responsibility to make sure they're operating within the framework of whatever laws of the jurisdiction that they're in. So if you're raising funds for a business to build a business, then it makes sense to follow the law and make sure you're using the right framework, whether it's, again, CF or A. In the case of giving it access to non-accredited investors, the ability to participate in the capitalization event. In the case of product in the form of a digital asset versus a car have different issuance paths. As a business, again, saying that you're a business is important, because then you have that responsibility to tap your legal team and go through the process of determining what is the best way to de-risk this behavior that you're going to introduce to the public.
But so question, that makes sense to me. But the other thing Scuba said is interesting to me also, which is like this thing called Ether, right? Which is the native currency of Ethereum, and it has gone up a ton since the beginning. And there have been a lot of people working together in common to make that happen in some way. And now with this proof of stake thing, you can actually use the Ether to enter into an arrangement where you get paid based on the usage of the Ethereum network, which is a common network that a bunch of people are trying to promote and all this kind of stuff. And then the SEC also came out and said some things about Ether, which didn't totally make sense to me. But certainly Ether is in the game now. Is Ether in the game now? What is Ether? Under what circumstances, if any, should we be concerned that Ether is a security or some other SEC attention-grabbing object?
Well, and briefly speaking, all right, in both of these scenarios, I want to plant the seed that if an entity, that could be an individual, that could be a business, whatever it may be, receives value without saying money, okay, without financial gain, is there a difference between calling that an investment or calling it revenue? Because in the sense of Tesla, they sold a car, and that car brings in value in the form of revenue. But they also sold stock that brings in value in the form of investment, right? And so that's kind of where I see it, right? What have you advertised, which we know is a thing legally, and what is the expected result of the return of value on that, right? With a product, you've already delivered it. So with a goblin, you're saying, there's your product, I'm done. But with stock, here's your paper, I'm going to keep working on it.
So as a programmer, there's what's called typing. As a programmer, you have typing that defines what you can do with a certain variable. So, for instance, a string deals in the characteristics that support alphanumeric characters, whereas a float or an integer deal with numeric characters in different regards, objects, arrays, etc. The typing functions as a definition. In the law, there's definitions for everything, and those definitions have a very verbose kind of explanation of what they mean. So in the case of Tesla and its products, what they define as a product falls into these certain classifications that make it or that type it as such. With digital assets have the same type of, call it, typing. A digital asset, specifically a crypto asset, include cryptocurrencies like Bitcoin, Ethereum. Bitcoin, Ethereum are commodities in some regard by way of those definitions, and not necessarily securities. That's changing with Ethereum. We'll see where that lands. But the basis is the typing, call it, the definition of these terms is what gives it context. So the car has its context, the sale of stocks of Tesla stocks has its context. Here, the sale of an NFT and or a cryptocurrency and or Ethereum, etc., they all have very specific contexts that kind of define what these are and how these definitions relate to the law. So I think that that's a really important thing to use when you're making the contrast to markets outside of the crypto space specifically.
Yeah, like you could have a car that came with the rights for 1% of future profits of the company. In which case, then that car would probably selling that car would probably be an investment contract. At the same time, you could have a car whose greatest use ended up being it going up in value, not ever driving it, and that would be different. That's like the commodity case. Or you could have the car that is just that you just drive. But I think the question, right, is this kind of common enterprise thing. Like, are we in this together, and am I getting a cut of it? That seems to be, but I agree. It's like kind of this, there are these kind of in between, cases. I am curious about Ether. I am, curious about, you could imagine like one thing I was really pressing H on was like, the question of, is blank a security in the context of these questions? And obviously it's like you can construct something that has to be close enough, to be visible by that. And so one thing I was asking him is, okay, they call NFTs collectibles. Are baseball cards securities? Because you could imagine a situation where a baseball team issues baseball cards and says, hey, we all know these cards are going to go up if we win the World Series. And so here's a bunch of white papers on why we're going to win the World Series, and we're selling them to you at this lower cost right now before we win. And here's all the ways in which we're going to win. And, of course, in reality, what happens is there is a third party, Tops or something like that, who doesn't have any, common thing with the increasing the value of these cards via greater, victories in the, on the ballpark or whatever. So, you could imagine, even something like a baseball card, and this is a little bit of a strained example, but, if you're coming together in common and the person selling them to you is, and I guess in the baseball card case, maybe the person selling them isn't using the money from that sale to recruit a better pitcher, but you could imagine they would, then you could imagine a world in which a baseball card is more on the security side than than the collectible side. And, you have so here's a question, switching for just a moment. So not to single out any names here, but if you look at something like OpenSea, you can talk about the good ones versus the bad ones. Goblin's good, other ones, not going to mention any names, bad. Not saying good and bad, it's like whatever, just for these purposes, good and bad. But you have something like OpenSea, which has a bunch of good and a bunch of bad on it right now. That seems like a tricky problem for them to solve. I wonder if they've thought about this already. What is the future? What should we think about OpenSea?
So before you hit OpenSea really quickly, just because it's on topic with the cards example, the NBA issued a license for Dapper Labs, which created Top Shots, to use it for their, call it, trading card, NFT, collectible experience. Currently, as of May 2021, I believe you have to, I don't know the exact, I don't know if it was May or June, but May or June of last summer, they were issued a summons from first New York, then that escalated to the Fed for issuing an illegal securities, because the investors, call it, purchase these digital assets. Remember the variable thing, these quote unquote digital assets, with the hope that the value would go up based on both popularity and the efforts of the company, the business. And that's kind of the leading set of claims that drove their ability to file this civil suit against Dapper Labs. So again, are you running a business, and are the people buying what you're selling because you're marketing it as a business with the expectation that your efforts make the price go up? So I wanted to hit on the trading card case for that reason.
That's a great point, because I'm talking about, what about a baseball card in like the ye old days of baseball cards? We're just like, okay, the new baseball card thing happened very recently, and it was a big problem. And so, my example was the NBA call in this case, promising that it's going to try really hard to make the card values go up by, winning the World Series of basketball as the championship. I'm not a big sports guy. Whereas in this case, the Dapper folks were making the more straightforward NFT claim, which was basically just like, hey, like, we're going to keep doing, we're going to do all kinds of cool stuff and build all kinds of surrounding content that's going to make these things go up. And, that impression was created. Certainly the impression in my mind created when I first heard about Top Shots was like, heck, like that could go up a lot. Maybe I should buy one. It's like, it was too expensive. But so that was the basic allegation there, is they were just doing the standard NFT thing of, we think these NFTs are great, and we're doing a lot of cool promotion and maybe even celebrity endorsements, right, to make it go up. And then, you have people get burned, and then that's the question. So yeah, I think that's a hugely interesting case there.
It's important to understand, like there's a process for these things. It's not that you can't do them. There's just a proper set of sequence that you go through, that the SEC issues that protects not just you as a business, but it protects the, call it, class of investor that typically fall victim to the bad actors within these frameworks. So we call them rugs. People call them scams. They did this with the stocks in the pink sheets in the 80s. They did this with ICOs. They've done this with the bubble, the .com bubble, where people just issue paper to people that don't necessarily have the technical and financial framework or knowledge, know-how, or sophistication to, call it, evaluate the risks in investing. They sell their 401ks, they sell their kids' college funds, they put all of their money into this dream, and they don't know how to necessarily execute finding the right spot price, the right exit strategy. It's the entirety of the whole accredited investor is to protect the people, and that's what the SEC is designed to do. So if you want to raise money from the public to build a business, then there's a process. If you get a Reg CF, go to the SEC's website, use Edgar, file your paperwork after you've created your LLC or whatever business entity structure that you've created, and then you can have all the fun in the world and issue paper within the guidelines of that framework. But putting up a website that has this kind of structure to put these speculative ideas out for a a non-accredited person to come in and say, yeah, I'm putting everything I'm betting the house on this thing is it has civil consequences. The framework doesn't stop at the issuer. It extends to the process of promotion and the actual exchanging of these in secondary markets. So first, the promotion process requires you to have a certain license. This license they call a broker-dealer license. You get these broker-dealer license from FINRA, which is another government agency. You go through, depending on the scope of your license, there are licenses that are exclusive to bank charters. There's licenses that are exclusive to stocks. There's licenses that are for private investments, like raising funds for a startup, for instance. Getting the right type of, as well as an exchange, but getting the right type of license allows you to promote the sale and issuance of securities. Then you get to the exchange part, which is the open seas or platforms like Republic. Republic is a AngelList company. AngelList acquired Republic some odd years ago. Republic has the same concept. You go to you register your project. You get a date, a flight date, a launch pad date. They put it on their site. There's a fundraising event that favors everything that a mint favors, except you're using US dollars and credit cards or bank wire as opposed to crypto. You're contributing, you're participating in this capital raising event, and you're issued some type of memento that represents your ownership of whatever amount of capital that you're putting in. There's all kinds of other incentives. There's like a equivalent of a white paper. There's a face pal with team members on it. It's all the same exact structure, but it follows the guidelines of the law. And that's why it's able to have a healthy working relationship with the companies that get issued through their platform. Whereas when you are kind of mixing the assets, you have a little bit of securities mixed with a little bit of not securities mixed with a lot of bit of art. There's a significant risk that as a platform that you're taking, as a platform, you need to go to FINRA and go through the proper course of getting the right licenses. It's different if you're dealing in, call it, user-generated content. There's a lot of nuances there in the terms of how blockchain technology works and how you're, call it, reading from contracts and you're just a viewport. But then when you're no longer just that viewport, you're an actor in a liaison in through your contract suites, or you're a liaison in the handshakes, call it, within that deal flow, then you become a high-risk actor, violating the framework that the SEC has put out. So it puts exchanges in the hot seat. This is why also you'll notice that, you know, the code base to do an exchange is on the more primitive side. There's enough open source out there that you can stitch it together. And if you have, you know, $10 million from your NFT launch, it's very accessible to you. You would think that a collection who now they're live, they hire a lawyer, they got an accountant, they made all this money, they want to figure out what to do next. You'll notice that they do not launch exchanges. They look to the community, they look to other platforms to launch these exchanges. And a lot of there's a lot of issues when it comes to the participation as that, call it, collection with the operation of your own exchange. So that was a lot of information. So,
well, yeah, no, I think just to emphasize that last part, if you've ever looked around and wondered, hey, why is OpenSea so dominant in a space where the top players on OpenSea have so much leverage? You know, why doesn't some top player launch their own thing and, not even compete with OpenSea as that, but at least like get some of the fees back or have like a better branding thing or, be your own thing. And OpenSea is also just down a lot, which would be easier to avoid if you were doing a smaller thing. OpenSea is so big. Why not launch your own thing, top collection on OpenSea? The reason might be, you never know the reason, but the reason might be, that is a headache there on the old SEC side. So on the C side, on the SEC side. So, that's always just kind of a fun thing if you're trying to analyze the world and something seems weird, what might you be missing? And one thing in this nascent space full of chaos is that people are behind the scenes really stressed out about this whole securities thing. So I think that's a really interesting point. And so, yeah, why not just let OpenSea take the take the heat essentially? So, there are other things at play, but I really like that point because that's some real alpha value we can deliver to the listeners of this podcast. It's not just a topic of interest, it's also a framework for how you can kind of look at what other people are doing and try to get into their heads, because I think it is safe to say that at this stage, everyone is thinking about this, and now you are too. So I guess then, what's the next kind of question? I think the question for me then is, you look around, you see, okay, things were really good in the beginning of this year. I've only been around since the beginning of this year. But my understanding is it was really great last year, very good at the beginning of this year. Then it got worse, and then it got really bad, and now it's really bad. And so people are feeling like, wow, everything is down. All the NFTs are down. Everyone lost money. ETH, it's not as bad as it could be, but it's not looking good. So everyone's down. But it could still get, I don't want to be alarmist here, it could still get a lot worse, basically, because we have yet to maybe, and it's not going to, maybe the other side of the coin is, if you look at the ICO thing, look at history, it's not like it's going to get unlimited worse. We can have like a rebirth when, the thing kind of figures out how it should exist. But in the short term, it could get a lot worse. Is that is that accurate?
It can go a lot of ways. I mean, MakerDAO, who's by far one of the most dominant holders of stored value, blocked value, by way of Uniswap, by way of their own vaults, and by way of the DAI stablecoin, they are about to buy $500 million worth of government bonds, which says a lot about kind of the asset-backed token class and the awareness to kind of decouple the correlation to Bitcoin. The big crash that we've experienced was largely because everything is correlated to Bitcoin and synthesized through all of these different decentralized exchanges. Before, it was, Binance is in control of the market, and Coinbase and your individual centralized exchanges. Since the advent of the automated market making and the decentralized exchanges, trading volume on them have eclipsed some of the biggest exchanges. Uniswap trade volume is greater than Coinbase trade volume. That's a bit alarming.
Whoa! Did everyone hear that? By the way, did everyone? I don't see any people. Give a heart or an emoji. Give a reaction if you heard that and didn't know it. I didn't know that. Uniswap bigger than Coinbase. Let's see some reactions out there. Come on. Okay, I'm seeing a heart. I guess everyone already knew it, I guess. I said even react if you knew it, but I'll react myself. All right, yes, we got some more. Thank you. I appreciate that, y'all. That is so yeah, maybe I'm kind of pushing and pulling here, but maybe I'm being a little bit, in that framing was a little bit too pessimistic, because there are, when you look at, and what does Bitcoin even do, by the way? Nothing. So if you look at like what's actually going on, there's still, a lot of innovation that should justify, some of the decoupling that we need to see. And so, so you mentioned DAO, MakerDAO. There's also other DAOs. A fun DAO that I like, Nouns DAO is a fun one. That's more like cutesy than like more about the finance thing. But how do DAOs figure into maybe being interesting or helping solve or address some of these problems, or a different structure? Because a DAO is something that is kind of like a company in that it has the O, it has the organization, but it is not like a company, or at least theoretically, right? And that it has the D, it's decentralized, and it's got all these other interesting things. So, we're trying to avoid situations where we're all joining companies together to make money surrounding the promotion of and increase the value of a stock. How do DAOs figure into this kind of conversation? How should we look at DAOs?
DAOs are extremely complicated. our favorite A16Z launched a series of reports that dug into DAO frameworks, and they created this really wonderful flow chart. I can circulate it. I've tweeted it before. I don't know how to find it. But in the framework, it takes you through a journey to really help you decide what's the legal entity that you're going to wrap that DAO in. Are you going to be entity list, which some DAOs can because of the way in which they formed. Some DAOs can't because of how they deal with income that comes into the protocol, how they deal with revenue that comes into the protocol, royalties that come into the protocol, the management of that value, and the redistribution of that value. It's nuanced. So when you're redistributing value in a payroll-like way, then you need to follow certain guidelines. When you're distributing value in a grant-like way, think nouns, then your structure could take a lot of different shapes. When you're not distributing money at all, and you're just making decisions within a generalized framework, then while you can protect yourself even further from other liabilities with a entity, you're not obligated to, or there's no real risk to. But you still, no matter what, and across all of this, you have to do the research. If you're creating a business of any sorts, money in, money out is the bare bones of that concept. It's important to properly set that business up. In that framework, they talk about everything from unincorporated nonprofits to foreign entity or foreign foundations to actual limited liability companies. Again, this is focused on operating this within America and dealing with Americans. Like an amazing nuance is a company called Realty. They've been around since 2020. They sell fractionalized real estate. You go to the site, there's a picture of a house. You can buy a piece of the house for pennies on the dollar. Call it $50 is like the minimum of some of these token ownership to participate in this fractionalized model. Now, they are Reg S, which stands for, or which allows them to sell the American assets only to foreigners. You can't, not even I don't know if foreign nationals are supported, but you can't be a U.S. citizen to participate. So if they are U.S. properties, but only tranched in a company that allows the participation from outside the U.S. That's their technique to circumvent kind of the rules that are enforced in framework that's enforced by the SEC. So if you're making a business, it's critical to do your own research. If you're building a DAO, you should take a look at the A16Z DAO entity selection framework. There's a beautiful flow chart, and there's two guides that are a bit lengthy, that detail all the specifics that their counsel and research teams and analysts have discovered to be the most successful and appropriate models for the most appropriate business types. And then when it comes to those NFTs, when you're launching a collection, if you're an artist making art and you're distributing art, sell your art. That's great. If you're a business or attempting to position yourself as a business and you put out roadmaps and expectations for people at the time of that mint, then understand that you have the responsibility to orient yourself like a business. Some people are taking advantage of kind of the momentum, and it's ask for forgiveness and not permission, and to partner with the right people to kind of insulate them from these types of instances. But in the case of something like a Top Shots, you can see perhaps one of the largest collections of all time in a litigious situation for some time. So there's a lot to consider. The best thing you can do is just be responsible in your decision making and intent when you're building this stuff. If you're going into it with the intention of, hey guys, listen, we can sell these for 1 ETH and we have 10,000 of them and we got a whitelist and we paid some influence. If you're going into it with that intention, it's very possible that it could become disruptive to you.
Love it. I think it's kind of I think that's a very good point where it's like, on the one hand, you have to look at the technical side of things, and on the other hand, you've got to look at just like, what really does this look like to, someone who knows all that stuff but is just looking at it, and does this look like a business, or does this look like something else? So another thing that we had sort of talked about, which I think is another way to slice this and look at it, is there's ICOs, and you don't want the the C in that, the coin, to be a share of stock or something like that. And a share of stock means like, hey, you get a piece of future revenue, or you get some financial benefit, looking forward. And even if you're not getting a piece of future revenue, it's just like, even real stock isn't priced on the net present value theory, but is this thing going to go up, and is it a share in the business, this kind of thing. Now, there are other tokens today. If you look at the top tokens, there are a lot of them, the native token of the platform or whatever, but some big ones, and some big ones that have moved, recently or not, or come into existence, are, these so-called, governance tokens. So take the ENS token, right? There are various parameters on the ENS protocol. I think one parameter is like how much it costs to renew a domain or whatever, and maybe there's even a parameter which is how much does it cost for me personally, Middlemarch, to renew a domain. I think they have that ability too. It's like there are these parameters. There's the ways to govern this platform. Some of it is permissionless. Like, I don't think anyone can take a domain from you if you have it. But anyway, who's going to govern this? They create the token. They airdrop the token to the people who've been around a while. So those are the people who have a stake in it, who know the deal. And then they say, govern with this token. Now, sure enough, and when this happened to one of my friends, I wasn't around, but sure enough, if you're not that involved in the quote unquote governance side, then you would view this airdrop as just free money, because you're like, whoa, I checked my account and I have 100 of these things, and now it's worth X. I'm going to sell this ASAP. I don't care about governance. So it has this feel of money to it. At the same time, it has a very legitimate and very different function as a typical stock simulation coin, which is you can actually use it to make changes. And this is something people stress about a lot when they say, Coinbase controls too much of the ENS thing. So it's not just, but then again, stock you could use control. So how do governance tokens, and especially kind of like the rise of governance tokens, as those are kind of more recent than some of the classical ICO stuff, how does that figure into this kind of conversation?
It's all into the whole, we're back to the variables of how the government classifies the tokens to begin with. So when the token is considered some sort of equity, some sort of debt, some sort of derivative, or any kind of, call it hybrid mix of these things, then it in fact is deemed a security, and it has a process that you need to follow to avoid being penalized by the SEC. How that comes about, and whether you fundraise that security versus give those call it tokens away, really can dictate a lot in terms of that framework. When your token doesn't have these characteristics of equity, debt, or again any kind of, to call it derivative of that, then you can, or you fall in dependent on whether or not this has some type of usable functionality outside of just the kind of speculative financial side of things, like governance. I can use this as a delegate, or use this as a calculation towards a delegate vote. When it falls within that scope, then it is in fact considered a token. So it's a token versus the call it coin or security. In 2017, when the SEC began to make statements, what the community at large noticed was the shift in language and terminology. Platforms like CoinList emerged. The CoinList platform became this central portal where you could, in fact, do a ICO. Instead, though, they called them STO. They were specific to launching either or issuing initial security token offerings, where you go through this process to qualify your business, register with the SEC, and then exclusively raise the funds within the CoinList site, lock the transfer ability of those funds to then later claim from the site and trade them within secondary markets like Coinbase or Binance or even a decentralized exchange. So they created a process for it. Tokens that structure themselves in a launch that doesn't look like a call it like predetermined range or a predetermined amount of tokens that are sold for, call it said price in this fundraising like event. Those tend to raise flags significantly faster than tokens that launch in this framework that they call fair launch. Typically, governance tokens launch in this fair launch structure. Fair launch looks like a 0 day where there's 0 tokens in circulation, and the tokens are emitted from some behavior, some activity. Think of it similar to points that you're earning when you're participating in a video game. So if I trade on this, call it Uniswap platform, or if I provide LP on this Uniswap platform, I'll earn Uni tokens as a part of, call it my reward. It's with these Uni tokens I can collect and then use them in calculating my delegate power to participate in, call it the governance voting. So the way in which you're issuing the tokens outside of just the business structure that you're using, but the way in which you issue those tokens guides it to either be a security or not. And it being a security is arced around, again, equity, debt, and call it a derivative mix.
Right. And so the converse of that, I guess, would be a case in which you're doing a token thing, and instead of issuing it based on people's activity, you are giving it to people, maybe some people, not other people, but they don't have to do anything to get it. Like, that is not good, or not good, but like that's not good if you're trying to avoid this type of issue, like the sort of getting something without doing anything. That's the sort of thing that happens when you are involved. That's the beauty of the stocks and so forth. You don't have to do anything when you're dealing with securities. You just get stuff. And so if you're in that zone, you got to kind of try to avoid that, which does restrict you in terms of how you can allocate this stuff and who you can think of as a beneficiary of this whole thing, basically.
It's also like, it's really important, again, if you're a business and there's this expectation that as a business, what you're doing is going to make price go up, then even if it does have utility, it doesn't negate the fact that it's a security. So you can use all of these different issuance techniques, but if the expectation is you company make value go up because you company do things, then it falls within that framework of being a security.
Makes sense. Yeah, no, it makes sense. It makes sense. So cool. So then I could go on, and I've already talked to Aish a lot today. I could still go on. I did, again, promise everyone the ability to appear on a hit podcast. Does anyone have jumping off point here in terms of a question for H or a comment on this? As I mentioned, this is actual knowledge, and that is sometimes quite exhausting to have to pay attention to. So sorry about that, but the upside is you learn something. But does anyone need okay, we got Dr. Robotnik. Welcome to the stage, Dr. Robotnik.
What's going on, Middlemarch? I got a question for H. On a scale of 0 to 10, what is the importance of being in this space and acquiring a lawyer, or what they call them, a CPA? What's the importance of that, just in safeguarding yourself from these nuances to protect yourself from going to jail?
So there's civil penalties first and foremost, which are different than criminal. You go to jail on the criminal, you pay big fines, big money on the civil. The responsibility to do research the responsibility to set up your business, if you're running one, in the right format, the responsibility of protecting your personal assets are the individuals. It's up to you. Um, a good lawyer is always a best friend to have, and a good accountant or CPA is also always a best friend to have, because you make all this money, then what? You don't want to find yourself in a litigious situation because you didn't pay those you didn't pay those cap gains, you didn't pay the IRS. So which is yet another government agency that can come after people that are profiting from this space. So again, it's your responsibility to do research, no matter what type of financial product you're getting involved with. These are all financial products. You can be a one-of-one artist and make some really cool art, and a lot of people could buy that really cool art, and you're getting paid in crypto, and the value of that crypto goes up and down. And you're selling it and swapping it. There are very specific taxes that are different than when you're selling this art, call it, in a physical gallery, and people are paying cash for this art. There's a lot of nuances. You go to your CPA to help guide you through those tax nuances. Again, the legal side, a lawyer.
All right, thanks. Last thing I just want to say, to that, right? I went on Coinbase, and I didn't realize that every time I converted Bitcoin to Ethereum, that was a taxable offense. Like, and I had no idea, and I did so many swaps. And when I looked at the little tax breakdown from Coinbase, I said, "What the fuck, man? It was like $8,000 or something that I owe in taxes." I guess I don't know. They're not gonna get it, but like it was there. So yeah, definitely good looking, H.
So one quick tip there, because I wrote a program to calculate my own taxes. Once you convert out of one asset into another asset, at that moment, a lot of people call it spot price. This is also called your basis. Okay. And so you actually carry that basis into the next asset. Okay. So if you're going from ENS to BTC, and your BTC goes up, well, you already have your basis that says, okay, the first 90% of this is not taxable. What you actually earned is your new taxable basis. So once you sell that BTC, let's say you go over to Ethereum now, that identifies your new tax point, right? Which is only on the profit increased in the value of BTC. And then now that you're in Ethereum, right, your basis starts at 0, and then let's say Ethereum drops. Now you actually have some tax loss harvesting you can do. So make sure you have someone who knows what they're doing.
Yeah, thanks.
Yeah, no, the only thing I would add to the first question is I've been involved in a variety, in the old Web 2 life of mine and the new one, a variety of situations where it's like, okay, can someone just tell me what to do here? Like, an accountant, a lawyer, someone just tell me what the right answer is. And I personally, maybe someone knows someone, I've never been able to find that. I've been able to find great lawyers, great accountants, but it's always the thing of like, if you know what questions to ask, you can get great answers that no one is just going to say, and I've been really looking for this, just like, tell me what to do. So, yeah, I think you got to learn, or I've just tried to learn it myself to the extent I can, and annoy people with questions, but it's so annoying. There's so much stuff you have to do to be, good here. You got to know the level one thing of what you're trying to do, and then you're getting paid in these crazy currencies. So what do you do with that? And then you're dealing with like weirdo tax things, and no tools work for that. And then, you get indicted for security flaw. And I hope that doesn't happen. But who's up? Who's got another question? Put up your hand. Miyagi. What's good? What's on your mind?
What's up, Middlemarch? Appreciate you guys dropping gems per usual. My question's kind of related to what H was just touching on, as far as we'll say 99.9% of the NFT market being securities. Where does that leave these influencers, quote unquote, or anybody who speaks about these projects? We just saw Kim Kardashian get hit with the $1.2 million fine. What do you see the future being for these influencers who've had 25, 30, 40, 50,000 followers and they've been doing essentially the same thing?
It's complicated. The it's complicated. The There's advocacy groups that capture data for the unsolicited promotion of any kind of security, or excuse me, the solicited promotion of any kind of security. They do this because they're enabled to provide that data to particularly the SEC. What the SEC does every quarter is rewards whenever they win cases against people, settlements or not. They give a portion of those proceeds to the different people, analysts, agencies that provide this data. So it has more to do with a person's individual goal to target very specific people, whether they're trying to make examples of the people or they're going after the capital side that they believe these people can pay. So it's not it would never come as a blanket, just like it hasn't in the past. It comes over the course of many years. We've seen this heavily with the ICO side of things. But it has more to do with the incentives. It has more to do with the proving the damages, proving the size of the damages and the impact. It's when somebody becomes a victim that the SEC prioritizes getting involved. The SEC doesn't get involved when there's no victims because they have a million other items on their desk that have victims that they need to protect. So a lot of this has to do with people basically snitching. That's the basis of it. So if people have been victimized and they call it snitched, then the right agencies, the right analysts will go in and look at where the value is in providing that information to some sort of investigation or some sort of case, so that they can make money. That's their end game. So again, it has more to do with victims. Call it snitching. That's perhaps the most direct way to say it.
Whistleblowing.
That makes sense.
Yeah, whistleblowing.
So I understand, H, you've been amazing. I understand that you have to stop, which is reasonable because this is like pretty much the normal length of a real podcast. This is a hardcore, unlimited time podcast. So I'm going to stick around and do a worse job of talking about any of this stuff with y'all. But I understand this is it basically. So hey everyone, you're welcome. I'll say that. H is a humble guy, but I really think you got some great knowledge here. So listen to it again because we're releasing the pod. And join us next time. Maybe H will come back someday. Please. And thanks so much, H. This was absolutely an amazing, informative, and entertaining session. Really appreciate it.
Thank all of you guys. I got to jump, but appreciate all of you guys.
Peace. But I'm still here. Sorry. I am... it's still the same topic. I don't want to start a new topic, and I don't have a tremendous amount of motive force here just because I was asking all of the questions. A question that I didn't ask was, what about Magic the Gathering cards? Are those security? So anyway, I can speak to that. But who else has any I can either answer or simulate what I think H would say. Dr. Robotnik, what's up?
I think 3 had his hand up. I don't know if he spoke, but he was before.
Oh, 3. Yeah. Not the 3, not done 3. A company and you're selling NFTs, then that's, a greater problem than if you're someone else. But I actually know zero about that. So does anyone know about that? You can speak to this point. This is news. So, you want to get someone who knows what they're, okay, we'll get back to Robotnik. You had your hand up, and then Squeebo next.
I think Squeebo was ahead of me too.
Squeebo's ahead. God, Robotnik, this is great. You're really helping me out here. Thank you. All right, Squeebo, what's up?
That's your co-host, man. Let's see here. So the cards thing, that really interested me because at least the way you described it, right? Unfortunately, you threw yourself under the bus, right? People who create something and then indicate an expectation of value outright. I mean, you're just walking into the crosshairs, man. Right? When
You're saying the Magic the Gathering one? Or you're talking about something else?
You were talking about, you mentioned baseball cards, but then H took it over to basketball cards and then talking about Dapper Labs, right?
Right. Yeah, the baseball cards question. Yeah.
And the way you presented it, yeah, you just put yourself in the crosshairs by saying, we're going to produce these cards because our team is going to the World Series and they're going to increase in value. Topps, Upper Deck, Fleer, all those guys, they don't say, we are selling the cards of the teams that are going to the championship this year. They just say, we're selling cards.
And we don't have control. We don't have control over who goes to the championship.
Right.
But the Yankees, if they try really hard and hire the best players, quote unquote, draft the best players, if that's the terminology, I'm not a sports fan, they can actually control it in some way. And so they could come, whisper to you, hey, like, here's our pitch on why these cards are going to, go up a lot. And I'm not sure, probably it's not the right answer, but like, I'm sure there's some, universe of reasons that it's good to not do this in a first party way. You just have like some distance from this. Your hands are clean.
Right. Unless you're a senator, that's basically insider trading.
Right. Yeah, exactly. Right. So yeah, I think the, and that's the other issue, right? You mentioned insider trading, like insider trading. And that's why everyone was pointing out that the whole Nate C thing, like everyone was saying like, this is insider trading, right? Because this is a guy who allegedly had knowledge of what was going to be on the homepage of OpenSea because he worked at OpenSea and made, it's like, well, that makes things go up. And so let me buy things before they go on the, that's pretty much classically like in the, intuitive sense, insider trading. But it's only technically insider trading if these are securities and no one wants these to be securities. So this was like the sort of energy out there at the time, which I understand. People were basically saying, don't use the phrase insider trading as pertains to this episode. And, so I think if they are securities, whatever collections we're talking about, then, in addition to, all the things about, the Kim Kardashian style promotion and marketing of these things, then, there's kind of this other set of questions that I don't know that much about. Ask H about it. But, who now has the, probably a smaller group of people, but who now is sort of like thinking, okay, I didn't promote these things, but what information did I use, when it went into this, sort of thing. So, I don't know the thing that well, so I don't want to say like, this is what should happen. I know very little about it, except on an intuitive basis, but it is an interesting thought.
Yeah. And two things on that, right? Is Paper Magazine going to claim that KK, broke the blockchain? That's part one. Part two,
right.
I think more accurately what we see with Frosties, and I forget their follow-on project, right? But focusing on the term defraud, right, helps us separate those two possibilities into our, let's say, personal ideals for the blockchain.
Right. Sorry. So you're saying the say that again.
So instead of saying insider trading, what's really happening is intent to defraud, right? They have a similar outcome, but with insider trading, right, it's based on the premise of a value or a security, whereas defrauding is anything that takes ephemeral value away from another person, right? During a divorce.
Right. So there's securities fraud, and then there's fraud. And fraud, securities fraud, I'm sure is worse, like harsher penalties, and maybe you're banned from being the CEO of a public company for life or something like that. But still, fraud, and there's even criminal fraud, I guess. So you could get yourself in trouble there. So regardless of whether it's securities, there is some protection. Going on, which is good. Robotnik, what's on your mind?
Just had a question for everybody on stage, being that there's some big brains on stage. Where do y'all see like the next stage of development as far as like, where do we go from here? What's the next innovative thing? Is it an NFT aggregator? I think that's pretty, you know what I mean? Like, what's the next thing that us as developers, we're trying to, innovate in this space? And as far as the NFTs, do you even see innovation scaling with just the PFP situation, the PFP NFT side?
Yes, it's a great question. I will throw something out there. I was working on a project that, to me, I was very proud of and felt reasonably futuristic. This was a project with for the crypto funk community called the Crypto Funk Auction House Flywheel, which is basically a product that, this thing.
Good
Yeah, so
stuff.
it's a product. Yeah. Oh, thank you. So, I think that was a lot of fun and a cool, I think it's great and people use it and I love it. I think that, I would like to take some of those, I think there's something about that that's not just restricted, to the function. If you look at like NFTX, which is on the other end of that. So, I just think a broader kind of, if you're talking about the NFT world, not necessarily the entire landscape of, the whole thing, which is another question, but like, that's something that I'm interested in pursuing is finding a, and this is also kind of an alternative to OpenSea too, finding a broader way to, in a sort of decentralized way, transact, surrounding surrounding the products, like by using oracles and appraisals and this kind of thing, whether it's lending or some sort of like pool equivalent of the flywheel, but like a way to kind of take that bigger is kind of one thing that I'm interested in. In terms of the broader thing, I am always interested in questions about subverting censorship, and I don't know how to actually do that on a product level. I did launch a product a long time ago that like literally does this. It's called Forever Message. XYZ is the URL if you want to buy one of these. It's pretty cheap, but you have to pay gas for putting the message, but basically a way of writing a message that you can never delete because it's on Ethereum. And this has like been an idea that I've been obsessed with ever since the beginning. The capacity of Ethereum to be like the only way to not get censored by a giant tech company, which I'm obsessed with because I hate, or I'm very scared of also these giant tech company guys. But I don't know when the kind of right time for that to come to market is going to be. So I'm kind of like keeping that in the back of my head is a very important thing, but I don't know if the time is right. But Sweeba, what's your future view?
Well, so when I look at the space, I see people who just want to make NFTs more dynamic or more fungible or more, which by the way, there's a spec out for that. I don't remember the number, but yeah, they want to do semi-fungible tokens now, which is a cross between ERC 721 and 1155, and ERC 20 in that it gives a decimals attribute, right? So you can actually specify that token number 7 has up to 3 decimals, and I assume you could sell it into thousandths.
So like fractionalizing it.
Yeah. All right, so there's that. But for me, I want to expand the entire blockchain space, right? So the things that come to me, a lot of people look at, how can I make, sorry, let me zoom out just a little bit. One of my common declarations is that wallets don't hold things. And people are just like, what do you mean? No, I got 57 tokens in my wallet. And I'm like, nah, man, wallets do not hold things. The smart contract that created that token has assigned it to your address, but that token is not inside, quote unquote, your wallet. Cue pictures of Zoolander, right? Banging on the computer, trying to get the files inside the computer. That's not a thing. But let's pretend, what if it was? Okay, and not just for NFTs, but for your tokens and other things. ERC 721 has this it's on ERC 721 received. And it makes this mechanism such that if you're using a smart contract as a wallet, then that smart contract can confirm receipt of the token. Otherwise, that transaction will fail and the token will remain safe in a real wallet. So this is a mechanic that exists today. What's kind of interesting is that it presents the concept of a smart contract as a wallet. So let's think about that. In this scenario, they're trying to confirm that it was quote unquote received. In reality, it was just reassigned, right? Well, what if we could say that it was received? What if inside that wallet there was a mechanism that said, I'm going to create token number 8 right now, and token number 8 is actually delegated to the collection contract, which has actually created token number 1032. So now we have something like a soulbound token, not quite, but whereby this token only exists as the connection between 1032 on the collection and number 8 on this contract as a wallet, right? So now you can actually have a wallet that holds things. Okay. That was a really lengthy explanation, but that's kind of my point, right? Is not just making NFTs better, but making the whole space better. If we have wallets that hold things, I think that improves our rights, right? And there's so many other things we can do like that in the space. I'm currently focused on security, aka protection, and I think we're going to see some really cool stuff there over the next 3 to 6 months.
Very cool. Yeah, no, interesting. I like that concept. Let me turn now to a true. Wait, Piv is a listener now? He was a co-host before, but I want to hear from Piv, the original stage manager or person on stage, a co-host. Maybe he does not want to talk or wants to but can't for some reason. Those are two possibilities, or it's all good, but Piv is someone to hear from on this. But in advance of that, I will what's up? Not done. What's on your mind? Oh, nope, sorry. Piv's here. Piv,
Yes,
what
yes,
is the future?
I had to leave because I didn't hear anything anymore, and then get back in.
Terrible system. It's a terrible system. What? So the question is, what is coming in the future?
I have no idea, but one thing I find interesting now is something like Indelible Labs, who makes it easier and easier to launch projects, and you see it really happening now. Quick, nice little projects who sell out very quickly, and just one guy who makes it. I think that's something new, because it becomes very, very easy to launch something like that. So that's something I find interesting, yes, and that's quite recent, that it's so easy to like in a night you can launch a nice project if you have an idea.
Very cool. Yeah, shout out to Indelible Labs. They just acquired indelible.xyz, the domain name. So if you visit them and don't use the domain name, you are costing them money in a way. So yeah, use that domain name and check out their product. Piv, also user of Indelible Labs. Indelible Labs, one of the launch partners to come out with Still Life. So yes, I think a creation tool, and that's one of the coolest thing when I first got, and to kind of Squeebo's point about like what it means to mint something, right? You're not actually like, creating something. You're just sort of saying this person owns this ID, right? And so I think the newcomer to the blockchain, when you go to look at OpenSea and you see like, oh my God, like what went into creating this whole huge page, of all this interesting stuff, and it's actually can be reduced pretty greatly. And even in Indelible Labs case, to the point where you don't need to even worry about the where the images are hosted. So pretty incredible stuff. I encourage everyone to check it out. I like that. Piv, a new thing launched today. I think it was by Whale Goddess was involved, not in this space. So I'm going to say Whale Goddess was not involved at all, tried to sabotage it, but failed and was devastated by that failure. Join the space if you want to hear the truth. Well, got a sorry if you're listening to this in heaven or on the podcast. Who else? I think this might be a good time. I mean, you know, the air kind of went out of the room. You know, if the guest leaves, it's a guest episode. So what are we all doing here? We can all be guests. And that's kind of a nice concept, that even when the guest of a podcast leaves, you can still exist independently of that conversation. And that's what we've proved today. What's good, not done. Do we exist independently of our back and forth with H. Wonder?
I like Muffle. I just want to respond real quick. Like, even with marketplaces, right? I hate OpenSea. I'm pretty sure a lot of us do. I think in the near future, it's going to be like a lot of subset marketplaces with like individual collections. Like, let's just call them nom noms, right? So nom noms that come out, but nom noms that have like a 0% trading fee for like moving nom noms on their own, you know, token gated platform, because that's just kind of like what I see. Even like I'm just over these platforms like OpenSea. So it's more so like, all right, let's create it. And even if it's not mass adopted when you create it, like not Lava Labs or whatever, as long as the community is happy and benefiting, then that's all good to me, you know?
Hell yeah. Yeah, no, I think, and it's not just OpenSea. Like, why can't everyone have their own funk marketplace flywheel? You know, why can't there be, you know, if you look at something like NFTX, which I love, and I think NFTX is a amazing, you know, tool, but when I go to it, I find it very not appealing to me from a user experience standpoint. It doesn't feel, you know, OpenSea is also not the most appealing thing because it's a sort of feels like productivity software, but it does feel a little better to me. I just feel like I'm in like some like DeFi cave dungeon. It's just a vibe to me. I'm also on dark mode, but we see what happens here. I think this has been a great conversation. This is the Capital 21 podcast. Capital 21 podcast is a podcast that is on all the podcast platforms, especially Spotify and Apple, but it is also filmed in front of a live Spaces audience. So if you've made it this far, you probably should show up Thursday at 5 p.m. Eastern and join us in the space, because you can appear on a podcast just like these people have. And a podcast is a great way to build your career and to practice your public speaking. I want to thank everyone who joined us today. Let me see some emojis. This will be good for the algorithm. If anyone wants to show an emoji to indicate that they had a good time, or that they could see how it was interesting to someone else, or just they miss H, feel free to do that. My co-hosts are Piv and Dovetail. Dovetail is not here right now, but he's coming back, and Piv is here. So shouts to Piv. And get ready for another insane podcast next week, next Thursday, 5 p.m., same time, same co-host, maybe different guest. If you or someone you know would make a good guest, feel free to DM me. My Twitter name is @dumbnamenumbers, and these days I'm getting a lot of spam DMs from people I don't follow, which I take to mean I'm doing something right. So put something compelling in your message, or I tend to go through them all. Anyway, I'm not getting that many, but join us next week and enjoy yourself. And shouts to Caps 21. Shouts to you all. And we are out.